Hi, this is Martise Brumfield with Martise Brumfield Real Estate, and today I have with me Anita Benjamin from Revolution Financial Management. Hi, Nisi.
Hi, how are you, Martise?
I'm good. So Nisi, or Anicia, is actually a financial coach. And so what we would like to do is share with you some important strategies as a homeowner so you can be better prepared with your finances. So I'm going to allow her to share any type of information she feels will benefit you as a homeowner. So Anicia, tell our audience specifically what they should consider when, as a homeowner.
Well, there are 6 areas specifically that I know that our company looks at in regard to just income overall, or should I say more financial plan overall. That being starting with the income. We want to look at what the income is, what they're bringing in.
Okay.
Because sometimes, it feels as though we have more month than income at the end of the
Absolutely.
At the end of the month,
Absolutely.
Right? So we want to take a look at what income is coming in, and then meet people where they're at.
Okay.
Because most people feel like they can't either save or get to their desired destination financially unless they are making more income.
Okay.
Right?
Okay.
But it's really more or less about our habits than it is about making more income. Because if we make more income and we go into
and have the same
habits, then
it's self-defeating.
It's self-defeating, and we're right back where we started, feeling like we need more income.
Okay.
Right? So those strategies, and then there's debt management. Debt management, we want to keep our debt low.
Okay.
Right? Because then it allows us the freedom to do more with the things that we want, or at least what we say that's important to us. Right?
Okay.
So what happens again, if we think about income, we think that we don't make enough income, so therefore we generally add debt to that, like credit cards, or we're purchasing the things that we want, maybe a new car, maybe keeping up with the latest and have some Jordans or whatever it may be, then most times we are maxing out our income.
Got it.
Getting into debt. You see how they play together. So therefore then we don't have enough at the end of the month, or we don't have enough to save or get to the things that we want to get to.
Okay, so it sounds like what I hear you saying is sometimes it's not about making more money. It's just simply about being smart about how we spend our money.
That's absolutely
with
correct.
our behaviors.
You said it very good, because that's exactly what it is. So it's helping families to realize what it is that we're doing, because the majority of us, we have those bad habits, right? Because let's face it, nothing about practical finance is taught in our contemporary school setting.
Okay.
Right?
Okay.
Not anything through grade school or high school or even college, really. I think I went all the way to a master's, and the only thing that I learned was statistics.
Yes, all of us have.
Which doesn't help me with balancing my checkbook.
No,
right?
it doesn't. Okay. No, it doesn't.
Accounting.
Yeah.
But I don't use. You're not going to use accounting on a regular basis, and accounting doesn't tell you how much money you should be saving.
Absolutely.
When it comes
and sometimes too, it has a lot to do with what we have been exposed to. Sometimes for us, our parents may not have been knowledgeable about how to save and what type of financial planning we should do. So therefore, there's that gap that has taken place where the information may not have been, shared, or that, the child didn't receive the information they need so they can make a more informed decision. And you have now adults who don't necessarily know how to appropriately, plan financially.
You hit the nail on the head. The thing is, again, we go back to how do we learn about practical finance or budgeting, budgeting our lifestyle.
Okay.
Right?
Okay.
It's that old, our parents call trial and error.
Right.
Is normally our teacher.
That's true.
So if it depends on what experiences you've experienced, then you may or may not learn from that.
Okay.
Right. And then that becomes your teacher, and then we pass that on to our children.
It becomes generational.
Exactly.
Okay.
But the whole idea about how money works and what are some of the things we need to be in consideration of when it comes to, like, for instance, how much of our income should we be saving?
Okay. That's a good question. It's a really good question.
It's a really good question.
So can you give us an example of that?
Absolutely.
Okay.
So on average, between 10 and 20% of our income should be saved.
Okay.
But here's the thing. Most of us feel like, ooh, shucks, I don't know that I can do that.
Right.
That's because we've never built the muscle. We never built the habit of saving.
It's kind of like going to the gym.
It's exactly like going to the gym. So when you build up that muscle and you change your habit.
Absolutely.
Right? Then here's the thing. Here's the trick, and it's not even hard. It's called pay yourself first.
Absolutely.
Right?
Yeah.
So we live below our means, meaning we keep our debt low, right? Live below our means a little bit. So we get into the habit of knowing that if we pay ourselves first, 10 to 20% of our income, we live off of 80 to 90% of our income, then we know we always have a savings.
Absolutely.
Voila. Okay. So it doesn't matter which income level you are, which bracket you fall into, tax bracket or what have you. If we put that in place, if we put the strategy in place, I'm going to save right off the top between 10 and 20% and live off of 80%. There we go. Right? That solves that
Be
issue.
money smart.
Be money smart. Another area is having an emergency fund.
Okay, that's very important.
That's very important,
especially when you're dealing with deaths maybe taking place in the family. You have a sick child or a loved one.
Life happens.
Yeah, life happens.
The car blows up. Right.
Yeah.
We need to replace the refrigerator.
Absolutely.
We lose a job.
Absolutely.
So if we have between 3 to 6 months of our monthly expenses saved up in an account that's accessible, then we don't have to interrupt our day-to-day, our daily expenses.
Okay.
Right?
Okay.
Do not have to be interrupted where we have to say, well, you know what? The car blew up, so therefore I'm gonna have to get a new car. I'm gonna have to replace it. So this month we're gonna have to hold off on the house note.
Okay.
Right?
Okay.
That's what we want to avoid, because then that's when we fall into debt trouble and credit trouble.
Okay.
Right?
Now, Anita, I have a question before you continue. So, is that something that's realistic for our audience, for our viewers out there who are in their minds living paycheck to paycheck?
Right. So it is realistic once we change the habit.
Okay.
Okay. So here's the thing. What needs to be done and what it is that we offer it complimentary is looking at the full scope. We call it a dream map. Right. We do a financial needs analysis on every family.
Okay.
Right. And again, it's something that's complimentary, but it gives that family an idea of where they may be spending too much money within their budget.
Okay.
Right. So we want to look at what's discretionary.
Oh, okay. Okay.
Because oftentimes, more often than not, what we feel that we're tied to and that we have to pay may not necessarily be so.
Okay.
Case in point, if we are spending, let's say, $500 in entertainment monthly, that's a discretionary area.
That is.
That's nothing fixed. It doesn't have to happen.
It doesn't have to happen.
Right?
Okay.
We're just used to doing that because that's the habit we built.
So it's really about making sacrifices.
It's about making sacrifices, yes, but it doesn't always have to be a sacrifice.
Okay.
Right?
Okay.
So, and the reason why I say that is it's only a sacrifice when we've already gotten ourselves into what we want to call a hiccup or into this bad habit.
Got it.
And now we've maximized our income.
Okay.
That's when we really want to analyze where's the money going, right? And then where can we reallocate? Not so much as everybody can't make additional income, but if they can, then that's wonderful, because then we want to start putting that in the areas where it should go.
Absolutely.
Right? And some of those areas are some of what I've already spoken about. Debt management, a debt management strategy of how to pay down the debt if the debt is high. The emergency fund, making certain that there's a portion going toward that emergency fund, because we want to build 3 to 6 months worth of savings for emergencies.
Okay.
And I didn't get to the last 3, which is also proper protection. And that's making sure the family is protected with life insurance.
Got it.
Understanding the purpose of the life insurance, and then what life insurance should encompass.
Okay.
Right? Because most of us think, okay, final expenses. Yes. But if you have a family, right, you don't necessarily, especially if you have a spouse and children, you don't want their lifestyle to have to change. Because we're no longer here.
Right.
Right.
Okay. Because they've gotten accustomed to living a certain way. So yeah, I totally understand.
So we don't want to have to move out of our home, right? Now that our loved one isn't here to provide for us anymore, we don't want to have to change our children's school.
Absolutely.
We don't want there to be such a drastic change. So there should be at least 10 years worth of income replacement within that policy.
Got it.
So going into more detail about what all life insurance should cover. And then there's also asset accumulation.
I got it. Okay.
Right? Which is generally oftentimes our long-term savings, and looking at the various different accounts that's going to get us to our destination, right? Our retirement destination, or the lifestyle that we want to live. Again,
in that point, it could be maybe purchasing additional real estate.
It could be purchasing additional real estate, our dream home.
Absolutely.
It could be income property.
Okay.
It could be whatever someone's going to get married, you want to save for our daughter's wedding day, or a college fund or what have you. So just having the proper products to address those things that families want.
Okay.
Right.
Okay.
And then lastly, making certain that those things are protected. So
Okay.
asset protection, and you're talking about your wills and living trust.
Oh, absolutely. Okay. All right. So if our audience wanted to get in contact with you directly, Anita, what's the best way for them to get in contact with you?
Either by phone or email.
Okay.
And I can give you my phone number.
Yeah, go ahead, please.
Direct. It's 818-523-5886.
Okay.
Or my email address, which is moneymatterstothebenjamins
Okay,
at
great.
Gmail. And it's all spelled out. All spelled out.
It's cute and it's catchy. Money Matters at the Benjamins.
Money Matters to the Benjamins.
Money Matters to the Benjamins.
At Gmail.
At Gmail.
Yeah.
Perfect. Okay. And we'll have this displayed too at the end of our segment here.
Excellent.
For those of you, who didn't catch that. But again, if you have any questions about any type of financial questions or issues that you might have, feel free to contact Anita Benjamin. She is your financial coach, and she is with Revolution Financial Management. So again, thank you, Anita, for stopping by. We look forward to hearing from you again soon. And you guys, thank you so much, and we look forward to seeing you again on MartizeBrumfieldRealEstate.com. Take care now. Bye-bye.
Bye.